Hey, what's going on, everyone? Amir Garami, MCF Mortgage. Welcome to episode 13 of the MIDD. The MIDD is the Mortgage Intelligently Deal Desk, where we discuss a recent deal that we've either rescued or we've saved. And we will discuss the details of it, show you guys how we saved it. And if you find yourself in a similar situation, please reach out to Ray or myself. And we'll be happy to shepherd you guys to a successful closing. All right, so today's deal is, man, this one is like, I feel like I'm on a soap opera. We got some cheating going on, yachts, Florida, Potomac, Maryland. If you guys are from the Maryland area, you guys know, I'm not Potomac, Great Falls, Virginia, right? All, you know, it's a lot of money involved here. So this one's juicy.
Yeah.
Ray, take it away. I'm excited.
Yeah. So this one was brought to me by one of our referral partners who is a divorce attorney. As you guys know, we also work with divorce attorneys, CPAs, accountants, financial advisors, in addition to real estate partners. So this one was brought to me by one of our divorce attorney partners who has a couple who was, well, at least one of them was going through a divorce. The other one wasn't quite, at the time, was quite aware of what was going on. Yeah, it makes it interesting, right? It's a long story, so I'll try to keep it as brief as possible. The short of it is, this couple been married many years, own multiple properties. Both borrowers were self-employed, so they each had their own individual businesses that they were self-employed with, and they also had a couple businesses that they were jointly owned and also self-employed. One of the spouse, I won't even say which spouse, but one of the spouses, and they also owned, like Amir mentioned at the beginning, a very large boat, like a yacht, basically. Well, not basically, it is a yacht, which they kept down in Florida. And one of the spouses basically just would make several trips down to Florida for business purposes. But while down there, the social media, the other spouse that was here I'm in Bethesda, Maryland, in the DC area, Washington, DC area. The spouse that was here in this area, that spouse happened to find a post online of the spouse that was down in Florida with another person on their yacht. On top of that, so that kind of started the proceedings of having her having some communication with an attorney and starting the whole divorce component of it. So and that's how I got involved, because they owned, like I said, multiple properties, and it was more so, how can I remove one spouse from a property without them finding out about it? Essentially, that was the initial conversation, right? And then it was, hey, we have these other properties that we own, don't have any mortgages on. How can I cash out of these properties without the other spouse knowing, because this is my intent, right? So it was a lot of stuff. Needless to say, once I advised that, since everything is in both names and communal estate, you couldn't really do what the spouse was asking for, what the borrower wanted, right? You can't just go and do a refinance of some and remove someone from title without that person signing off on it. You can't pull cash out, do a cash out refinance on a property without the other spouse finding out about it. So once that was sort of put out there, and they received some knowledge on that, things sort of cooled off for a minute, because then they needed to go back to the divorce attorney, right? And work things out. So A few months later, I get a phone call again to basically start the process of exactly what they wanted to do at the very beginning, what one of the spouses wanted to do at the very beginning, which was remove one spouse from the primary residence here in the DC area, and then also remove and actually do cash out refinances on the other properties that they owned, some in Florida, some here in the DC area, a couple in California. So it was, extensive. So what was the issue with the whole thing? Two major problems.
You mean that was an issue? Yeah.
Yeah. Well, outside of their personal issues, right?
Right.
From a lender's perspective, what was the issue with with the transactions, right? Number one was that once the spouse that learned about the divorce proceedings took place, once I guess he was or she was served papers, they stopped basically being involved in the finances of everything, right? They stopped making payments, they stopped making credit card payments, making mortgage payments, and so forth, right? So that was one obstacle. The other obstacle was that being that they were all self-employed, right? They didn't really show much income, what we talk about all the time, right? It's, using not even loopholes, using the basically, IRS laws, right? In order to deduct, to depreciate income and assets, at the bottom line, although they own lots of properties and obviously had, cash in the bank, just when it comes to income, they don't show much in order to qualify for conventional finance.
And there's nothing illegal with that, right? I mean, it's everyone's using the tax code to their full advantage, and we urge all our the families that we work with, if
absolutely
you can choose to use it.
Absolutely. So that being said, that's what I was working with. I was working with a spouse that really had no interest in being involved in the proceedings of, these refinance transactions, versus another spouse who was very motivated to try to get all this stuff done and done as soon as possible, right?
Right.
But being that a lot of the property was in both names and a lot of the credit was joint, when the one spouse that was handling the finances stopped making these payments, it actually impacted the credit for both spouses, right?
Sure.
So, which made it very complicated. Now, the one great thing they had was, and other than obviously their credit score was impacted, so their credit score, may have been in the mid 800s, right? Mid 800s or low 800s. Now we're talking low 600s, high 500s, right? Huge impact from the initial time that I pulled the credit or had the initial conversation with that first spouse. Credit score was amazing. 4 months later, credit score had dropped dramatically because of the lack of payments. So, but what they had was equity, right? They had lots of equity in the properties, their primary residence, and also in the properties that they had in these other states, their investment properties that they had in these other states. So we were able to help these borrowers out, the primary borrower out, by refinancing these transactions based on their equity in the property, as opposed to where credit scores, right? Where that's really one of the main factors, right? And doing loans, right, are credit scores. So although their interest rate was not, great because of where their credit score was, at the end of the day, what I was able to do was refinance the primary residence here in the DC area and remove one of the spouse's name, eventually, of course, through the attorneys. The lesson for me here, there were many lessons, right? But I also became sort of like a therapist, right? In addition to a lender, right? I was a therapist lender and almost, almost like a
Theralender. Yeah.
that's a good one, Theralender. And just providing, for kind of, and that, tell people all the time, I'm not a financial advisor, just basically, talk from experience, right?
Right.
Which was what we do. So, and the short of it is, at the end of the day, because of the equity in their property, I was able to help them basically split the properties up by removing one name or the other from the investment properties, provide them with the cash that they needed, or they wanted to pull out of the investment properties in order, for them to proceed with the divorce.
Right.
And it was, it's obviously uber complicated. I'm not really getting into the crux of it, but at the end of the day, it was one of our portfolio loans, or actually all the transactions were portfolio loans. We ended up doing, I believe it was 4 transactions for these borrowers, Amir.
Right.
And they were all cash out refinances, except for on the primary residence was not a cash out refinance. That was just basically, the purpose of that was just to remove one spouse from the mortgage. So
Right.
in a nutshell, it was a long process. Even doing each property individually, just because you have one spouse who wasn't cooperating with the process, right? Until counsel got involved. So it was, I would say, from start to finish, it was probably like 4 to 5 month process, which is a long time.
Right.
And during that process, as credit reports are only good for a certain number of days, right?
Right.
A few months. So, we had to repull credit, and every time we repulled credit, what happened? Score went down even more, So, luckily though,
score went down not because we're repulling credit, because they're not paying their mortgage payments.
They were not paying their mortgage payments. They were not paying. I mean, so the upside to this is that, the one spouse, we talk financial literacy, right? All the time, right? The one spouse was relying on the other to pretty much handle their entire all of their finances, right?
Right.
So the lesson learned here, and, from the spouse that I was working with mainly, was moving forward, that it'll never happen again. Right? They're taking control of their own finances. And this is something you and I talk about all the time, right? I mean, take control of your own finances, be involved, even if you have, you're with your spouse, with your husband or wife, be involved in that, and your, personal financial well-being, right? Know how much money you have in your bank account, know where the money is going, right?
Know your numbers.
Know your numbers, get involved, right? So, that's the one I would say, there are many, but that's one of the sort of the bright sides, the learning lessons here learned by the one spouse that I was dealing with the most was, and they told me this was, I'll never let this happen again, and after the 3-month period or 4-month period when we had to repull credit and credit was lower, I would say this, when they divided their expenses, the expenses that the spouse I was working with was responsible for, all of those payments were picked back up, right? And were made on time and so forth. The expenses that were the responsibility based on the divorce proceedings and separation agreement from the other spouse, those were still on the decline, right? I mean, they were just flat out not doing anything. So, but in the end, we were able to, help these borrowers out in a very difficult situation, very, very difficult times in their life, right? With one of our portfolio programs where, we didn't really necessarily look at the credit score, but we really used the equity in their properties to help out, even on a primary residence. And these, one of the things they asked me about were, because they were actually, all of their business were involved around real estate, right? So they were familiar with different types of loan programs. None of these were hard money loans. They were just our portfolio programs that we used for this. So I said I was going to keep it short. That didn't seem like it was too short, but I apologize. But yeah, and I did try to keep it as brief as possible.
All right. No, so Ray, some things for our audience who may be watching. This was, Guys, on our portfolio products, we actually design a loan to meet your needs. It doesn't fall into a box. We do play outside of boxes. I mean, that's where the magic happens with our portfolio program. So if you're not falling into that box, that's where we come in and we draw a box. It might not look like a box, but we'll draw one around you and fit you into it so you have a home.
You bring up a good point really quick, Amir. So even the divorce attorney who referred the partner, the client to me, right? They actually even called me and said, how are you able to do this, right? I mean, he knew their credit score had completely tanked, right? So how are you able to do it? So here's the gist of it, right? One is that they did have equity in their properties, right? And two is, I mean, we still, although they write income off or they write expenses off, right? And they have, low adjusted gross income on their returns. We do analyze their businesses. We do analyze the fact that they were actually earning income, right? So we do, look at their ability to repay the mortgages, right? And they clearly had the ability to repay the mortgages. Right. So, and that's what I was explaining to the divorce attorney or referral partner. It was that, look, these borrowers, just because they don't show, and they did make, they were in the seven figures, right? But just because their adjusted gross income was single digits, right? They still have the ability to repay.
Which is very common, guys. If you're in the real estate business, I mean, our former president, President Trump, is in the real estate business, and his tax returns, if you listen to him on stage or, the pundits talk about him, he barely pays taxes because the real estate business, the way the tax code is set up, and these borrowers were in different, verticals of the real estate business, it allows you to write off the income, and it's all legal, right? But it's a double-edged sword when it comes to getting a home loan. Right. So when you're getting a home loan, us as lenders, we have to rely, when you're self-employed, on your tax returns. When you're in the real estate business and you're writing everything off, well, there's no income. And that's where our loans come in. And you said a key word, Ray, ability to repay. So guys, we look at that. We're not giving you asset-based loans where you may not pay it back because you don't have the ability to pay it back. We want to make sure that these loans are paid back. We want to make sure that we're putting you in a place to succeed. So we do look at the ability to repay. We do analyze their income using our methods, and we do extend the loan. Now, another takeaway, if you are unfortunately in a scenario where you may be going through marital disruptions and heading towards that divorce route, I keep bringing it up, and we talked about it in our prior episode, is you need to have your wealth team ready. Your wealth team lender, as you guys all know, in America, the number one way to become wealthy is real estate. So when you need real estate and you need money, your lender should be your number one wealth team advisor. Your realtor, your CPA, your CFP, and your attorney. Especially in a divorce, you want to get your lender, if you already own a house, you want to have your attorney get in touch with a trusted lender immediately. There are ways that we could organize and help guide the attorney through the divorce process of how to structure settlements, how to structure alimony and child support payments, how we could structure them into special trusts to document income. It's very important. It's also important if you are looking to buy, maybe you guys don't own right now, but you're looking to buy after this event, how to structure your finances for that scenario. Divorces happen. It's part of life. But planning accordingly and having the right partners involved will allow you to have a successful transition after the divorce.
Absolutely. That's exactly right, Amir. So, just to reiterate, I mean, I know you mention it all the time, but Amir just said it again. Lender, realtor, CPA, financial advisor, and an attorney, and probably even an estate attorney. Right. You want to have those 5 components or those 5 people in your back pocket, right, to help you just throughout, your it's not even just real estate, right? I mean, just life in general, and getting to that point where you're financially, I don't know if it's different for everyone, but I would, I'd say financial freedom, right?
Yeah.
But those five components, of those 5 individuals, will help you and protect your assets, your financial assets. So,
and just to piggyback off what you're saying, right? We talk about this all the time, guys. Financial literacy. You don't have to be literate on every topic. You need to be literate in assembling the right team who will help you with that literacy, right? You don't have to have all the knowledge. I think that's in fact the wrong thing to do, because everyone has a specialty, right? But if you assemble the right team, and we talk about this all the time, it's always concerning to me that someone may have a wealth manager, whether they know it or not. So for example, if you participate in your company's 401k plan, or the government's 403 plan or TSP, whatever your job is, and they offer that, there is someone at some level managing that asset, right? If you guys, you're with Fidelity or with E-Trade or Vanguard, every fund that you're invested into has a fund manager who's making sure that returns are coming in. They're managing your assets. I hate generalizing, but 99% of the wealth that families have is most likely in their home. It's their asset, right? The house. But it's also the biggest liability that they have on their balance sheet. They never have anyone managing that debt, right? And you need a debt manager. So your wealth team needs a lender who's also a debt manager, a CFP who's a money manager, your CPA who makes sure that the money and the debt that you're managing doesn't all go to the federal government on projects that may mean nothing to you, and an attorney who will help you navigate these loopholes. So guys, as Ray said, let's get your wealth team together. If you want to give us a call and discuss how we could be a part of your wealth team, if you need an introduction to a CFP, a CPA, an estate planning attorney, or an amazing realtor, give us a call. We work with a handful. I mean, I think we're in 12 or 13 states now. I lose count of the states that we work in, but we have local folks in every market that we partner with, in the sense that we want to make sure they deliver the right advice and sound advice to our families that we help, and we'll put you in touch with them.
Absolutely. Just keep that in mind. I mean, we have local professionals in every market where, if you're listening to this or you're watching this, we have local professionals that we work with that can help you if you want to assemble that team together. So, definitely feel free to give us a call. We'll be happy to provide that information.
And then I think the final takeaway from this one, guys, is if you're cheating, don't be on a yacht with a cell phone.
Don't post it. All right, everyone.
All right, guys.
Take care. Until next time.